Good morning. Thank you very much for joining us today in this week's webinar. This week we have a very special guest in 𝗄𝗲𝗍 Patel, and today we're going to be talking about the UAE R&D tax credit. This is a new initiative that has been announced by the Ministry of Finance and the UAE government, where if you're doing qualifying R&D work, you actually get money back for some of the work that you do. I'll let 𝗄𝗲𝗍 go into the details in that. I want to steal his thunder. My name is 𝗪𝗲𝗯𝗶. I am the co-founder of Taxstar. I'm also the co-founder of 𝗪𝗲𝗄 Partners. Taxstar is a tax technology company, and we have an e-invoice product as well as a corporation tax product. And this topic kind of feeds kind of well with us because we talk about tax all the time. 𝗄𝗲𝗍 has a very similar background to myself. We're both from the UK originally. We both had accounting firm. I still have my accounting firm. I think he got tired of accounting and he ditched it and he went fully into the tech world. So in the UK, he built a business called R&D_𝗿𝗃, and it's basically helping businesses prepare the process of claiming the R&D tax credits in the UK, and he's bringing that to the UK, and super excited to have someone like him here to help us get some credits that we obviously deservedly want to claim back. We will have Q&A at the end, so feel free to put your questions on the comment section. And without further ado, 𝗄𝗲𝗍, the floor is yours. Do you want to just give us a quick introduction about yourself?
Yeah, sure, absolutely. Firstly, thanks, Rehan, for having me. Much appreciated. Very excited to go through this new initiative. Folks, I'm 𝗄𝗲𝗍. I'm a ICAW chartered accountant. Have been practicing accountancy for many a year. My background, I'm an electrical engineer, and then spent over 15 years helping businesses claim R&D tax credits in the UK. So that's what I've been doing. I set up R&D_𝗿𝗃 in 2017 in the UK. We've been helping companies from startups, scale-ups to sort of listed businesses, helping them claim R&D tax credits in the UK. That's what we do, and that's what we have done for almost a decade now. And excited to bring this new initiative and discuss this new initiative that's come into play in the UAE. So I'm happy to do that. So in this session, what I'm going to do is go through things quite fast and be quite direct. And by the end of this session, you'll know exactly whether this credit applies to you. So let's go, Rehan. So let's do this. So on to the next slide, please. Thank you. Folks, so here's why this matters right now. The UAE is the first country in the GCC to introduce R&D tax credits, and in the whole region. Over 60 countries have introduced this worldwide, including the US, Ireland, France, and Australia, and the likes. So these aren't small economies experimenting. These are countries that have been rewarding innovation for decades. And so businesses have claimed over £70 billion in R&D tax credits since its inception in the year 2000 in the UK, at least. And that's real money going back into real companies. And now the UAE has joined them. The legislation was published on the 18th of March 2026. So that's about 6 weeks ago, I think. And the qualifying period in which the R&D credit would apply is for tax periods starting on or after the 1st of January 2026. So I've spent sort of 15 years managing UK R&D claims. The UAE version is structurally not too dissimilar, actually, and the opportunity is just as real, bigger in some cases, and we'll go through that in a second, and I'll show you exactly why in a few minutes as well. But first, what we'll do, Rehan, if you can just hop into the next slide, please. Let's just discuss what this is. So folks, you're already spending money on research, or your client is on technology, on innovation, and this credit gives you a percentage of the spend back in some way, shape, or form. We'll discuss that in a second. So it's not a grant, it's not a loan. It does not go away if you're a loss-making business. It is a credit against your corporate tax bill in the UAE. So right now, phase one is active, which is live, and it's a non-refundable credit. So that means it can allow you to offset your corporation tax liability. If you're a loss-making company, and if you're a founder thinking about this, it's if you make this claim, you can carry forward these losses and in exchange for a reduction in tax in the future. Now, phase two, which is coming, and it's expected to be introduced fairly imminently, will introduce what we would call cash refunds. And that's when it gets truly powerful for pre-revenue businesses. The date hasn't been confirmed yet as to when phase two will come in, nor has there been any sort of confirmed scope, but it does require a separate ministerial decision, which is different to the one that already exists right now, which brought this particular R&D scheme into play. But here's the point. The reason to act now is phase one, not phase two. So if companies that have their records ready for when the portal sets up will be the first to file as well, and we'll come on to that in a second. So next slide, please. Okay, cool. So I just want to talk just for a bit longer about phase two, because I know that's quite interesting. Phase two, because I know many of them in the room will be thinking about this. If you're a loss-making company, if you're pre-revenue or in a free zone where you're not able to make an R&D claim for many a reason, then phase two is the one that changes your picture entirely. Phase one is non-refundable, as I've just explained. So the direction is quite clear, and I just want to be very straight with you folks. Phase two is anticipated. It isn't legislated. It needs a new ministerial decision before it's real. There isn't a timeline, and there's no confirmed sort of scope as well as to what that would look like. What is confirmed is that there is a phase two claim going to be happening, but we just don't know when. So what I'd like to do now is just go onto the numbers and discuss phase one in a bit more detail. So on to the next slide, please. Okay, so this is the slide that makes people sit up a bit and gets them a bit excited. So you're able to claim back up to 2 million dirhams of R&D tax credits per year. So there are 3 tiers, and what we would call marginal tiers, just a bit like income tax bands for those that are familiar with income tax in other jurisdictions. So you don't get one rate on everything. You actually get sort of one or more rates. So here's how it works. So you get 15% on the first 1 million dirhams of qualifying R&D spend, okay? On the next million dirhams, you get 35% of qualifying R&D spend. And then on the next 3 million, you get up to you get 50% on the qualifying R&D spend. So that's a total of £5 million of spend. And if you add up all the R&D tax credits, that's up to 2 million dirhams a year. But here's the catch, okay? So each tier requires 2 things to happen. And this is what you folks need to take away. The first in that band and the sort of is the spend, okay? So the R&D spend. So you need R&D spend. And the second thing is the staff headcount for that particular tier. So you need both, just not one. And if you miss either of them, then that particular tier is blocked. And we'll come on to an example in a second. So let's just go through this right now. So if you can see on the far right on the slide, you've got 2 engineers, and let's just assume you've spent 800,000 dirhams of R&D spend, and that includes staff costs, materials, cloud computing. There's an uplift as well, which we'll come on to in a second. So you end up with 950,000 dirhams of qualifying expenditure. Because you've only got 2 engineers, you're only able to access the sort of the 15%. A, it's less than 1 million dirhams, and B, you've only got 2 members of staff, so it's only 15% of that which would qualify, which in this case would be sort of 142,000 dirhams. Now, in example B, just below it, if you have 8 engineers and you spend 2 million dirhams, and there's an uplift as well, we'll come on to that in a second. What it does is you've got tier 1, which attracts the 15%, but you unlock tier 2 as well, where you need a minimum of 6 staff. So you're able to claim back up to £500,000 when you do the maths on this occasion. And of course, if you have up to 14 engineers or more, then you'll get the full 2 million dirhams on a full spend as well, of 5 million sort of qualifying spend, if that was to happen. So what I wanted to illustrate there is the different bands. You've got to remember you need the R&D spend and the staff costs to unlock that particular sort of tier. On to the next slide, please. So let's keep this simple. Do you qualify? Does your client qualify? And point number 1 is your business registered in the UAE and subject to UAE corporate tax, or is expected to be sort of subject to UAE corporate tax? Point number 2, you need at least 2 people on the team working on R&D as employees, okay? And that needs to happen. And the third point, which is embedded into the legislation, is that you need to be spending at least 500,000 dirhams or more on an R&D project in that particular tax period, okay? So these are the 3 things that you need to look into. And if you're loss-making or pre-revenue now, the credit carries forward as well, of course, if you intend to make the claim. So when you become profitable, it offsets against your CT liability, which we've discussed previously. So on to the next slide, please. Now, folks, Rehan, many in this room will probably have a free zone address, okay? So let's just deal with this now. And the answer is, do you qualify? And the answer is, it depends on your tax status of your free zone sort of company, and not necessarily the postcode, as it were. So if you're in any one of these free zones, and there are many others as well, it doesn't automatically exclude you. And so what does qualify? So if your income, or the company's income, is subject to UAE corporate tax at 9%, this typically means that your income falls outside the qualifying income definition, or part of it might. So it's taxed at the standard rate. Or your group is subject to the sort of domestic minimum top-up tax, and that's sort of Pillar 2, etc. And if you and you might not qualify, if you're most unlikely to qualify if all of your income, qualifying income, is taxed at 0%, because you're not being taxed. Why would you make the R&D claim? So again, that's something to be sort of aware of. My practical advice, if you're in a free zone and you're unsure, find out your tax status before making a decision as to whether you qualify or not. And that's your sort of first question to answer, and then everything else will sort of follow through from that. On to the next slide, please.
Sorry, sure. This is quite an interesting point, right? Because in the free part of the rules in the free zone is that you have to have staff who are based in, to be a qualifying free zone, you have to have staff that's based actually in the free zone to be able to get 4%. But it looks like now that there may be some situations where a company may need to restructure, where if they're in a free zone, or if they're a qualifying free zone, they may, would you say that they would probably need to set up a separate entity just to do the R&D part of the operations? Or, but then again, if you do that, you're not profit making, right? It's loss making. So then it starts to become complicated, because your revenue is going to be most likely intercompany revenue.
It's a very interesting question, Rehan, and what you've got to consider when it comes to free zones is, obviously, if you're a qualifying free zone company and you've got sort of R&D activities in there, genuine R&D activities in there, the question is, yes, whether you sort of set up a new entity to sort of attract the R&D tax credits. But what you've also got to remember, Rehan, is one of the other bits in the legislation, and we'll come on to it in a second, is that the actual entity itself needs to benefit from the exploitation of the IP. So what you can't just have is one company building the R&D, always being loss-making and never generating any revenue. So yes, there could potentially need to be some sort of intercompany recharges or whatever. And the other sort of hard and fast rule is that you might elect to not be a free zone qualifying company. You can do that, but there are consequences of doing that. And so you're out of being a qualifying entity for a number of years. But again, it's a very good question. I don't think the legislation was intended to exclude companies resident in sort of free zone areas, but obviously certainly any companies that are qualifying free zone companies, they need to start thinking about whether it's even commercially viable doing an R&D claim or not, with all the structures and all the costs involved in doing that. Okay, cool. So on to the next slide. So I just want to say something, and that is, you need to memorize this. If a company thinks they're making an R&D claim, what they need to think about is, could a competent professional in my subject domain have predicted the technical outcome in advance of having conducted the R&D? And that's what you need to think about. If the answer is yes, then you probably don't qualify. And if the answer is no, then you probably do. Okay, and that's it. And that is something to do with technical uncertainty and not commercial uncertainty. Okay, so if you're thinking about, will customers buy this? This isn't R&D. But if you're thinking about, will this algorithm work? Then it might be R&D. Okay, and it has to be systematic. You need to follow a plan, and you have some objectives, etc. So we'll come on to that in a second. So this is something called the 𝗪𝗏𝗄𝗏 manual, folks, which is the OECD's global standard for measuring R&D, and the UAE legislation explicitly references it. So if you can move on to the next slide, please, Rehan. I'll talk about this in a bit more detail. Thank you. So again, it's the 𝗪𝗏𝗏𝗏 manual. There are 5 elements, and I think if I can just speak about them briefly. Every qualifying activity must meet all these 5 elements when you're preparing an R&D sort of project claim, and that's simultaneously as well. And it isn't a tick box exercise per se. So first of all, it needs to be novel. So you're creating something that didn't exist before. You're not adapting an existing tool, and you're not implementing a known solution. Okay, then it needs to be creative. So original thinking, not following a specification. So you're not sort of configuring Salesforce, for example. There needs to be an element of uncertainty. So you didn't know at the start whether it would work or not. So if a competent professional could have predicted it to say, hey, I think it will work, I'm almost certain it will work, then it probably doesn't qualify. It needs to be systematic. So you had a plan, you've got objectives, you've got a budget, and you've got records of what you're actually doing. And it needs to be transferable or reproducible. Okay, and this is the statutory language. Okay, folks. So in other words, what it means is that the results can be applied in other contexts or independently replicated, and either route would sort of satisfy it as well. If it's independently replicated or sort of applied in other contexts as well, it's transferable in other fields of science or other subject domains, perhaps. And the reason the last one matters, and because an activity needs to be reproducible, so you can repeat it externally without being strictly transferable to others. Okay, so if you're in manufacturing, you have a process improvement, or you're in deep tech, that it doesn't mean you don't qualify. Okay, there are certain criterion which allows you to fall within the regime of the 5 points of the Frascati manual. So what I'd like to do now is just go through this example in the real world. So Rehan, if you can just pop into the next slide, please. Thank you. So here we go. Again, I won't read through the slide and bore you folks to death, but novel algorithms, machine learning models, where the accuracy or performance was genuinely uncertain, that would be qualifying. Fintech infrastructure solving technical problems where there isn't an existing tool, that could potentially qualify as well. Drug formulation, biotech assays, clinical stage experiments. These are the obvious ones. What doesn't qualify is software development using a sort of a waterfall methodology where you just need time, money, and effort. There's no uncertainty as to whether it can be achieved. It just needs a bit of human resource and a bit of money involved. Configuring existing software just won't qualify, and obviously the likes of market research won't. So again, I hope this gives a flavor of what could and can't qualify in line of the Frascati manual as well. So if we can move on to the next slide, please. Thank you. Okay. What costs qualify? Staff costs, okay? So salaries, bonuses, employment costs of your R&D team, they all qualify for R&D, okay? And that's where most sort of founders will sort of set in, sort of be in that region, I suppose. There are something called personal service contractors, which we won't sort of talk about too much in length, but there's a piece of legislation which allows you to work with externally provided workers, which is sort of uncommon in the UAE, so we won't go into that in too much detail. And they also count as staff costs as well. You've got materials and consumables. So this is where you've got test materials, you've got computer software, you've got software license costs, cloud computing costs used in R&D. All of that would qualify for R&D. And then you've got subcontractors as well, and they also need to be UAE based subcontractors, and the activity must be performed in the UAE. But one thing you need to remember is, irrespective of how much or what cost category you fit in, you need at least 500,000 dirhams of spend on that particular project in order to qualify. Okay, so excuse me, be mindful of that. So if you have a project where a company is sort of conducting R&D and there are at least 2 members of staff, that's all well and great. But if the cumulative value of the qualifying cost isn't at least 500,000 dirhams, they don't qualify for R&D tax credits. Okay, so do bear that in mind. Next slide, please. Okay, there's something called 30% uplift, and just to sort of very quickly go through this. So on top of your actual staff costs, you can also get an uplift of 30%, and it's written into the legislation. So for example, if you've got 1 million dirhams of actual staff costs, your actual qualifying expenditure is enhanced by 30% to 1.3 million dirhams. Okay, and there are examples on the slide which just articulate, how much tax credit you would get back if you had 2 members of staff. It's 150,000 dirhams. But if you had, 6 or more, for example, then you'd end up with 255,000 dirhams as well. So when the tier 2 is unlocked, so just bear that in mind. So staff costs get uplifted by 30%, but when you're calculating the qualifying expenditure of £500,000, you don't include the uplift in that. Okay, the uplift is only after you've met the 500,000 dirham threshold, having sort of added up all the sort of different qualifying costs we discussed in the previous slide. Okay, so on to the next slide, please. Just going through this this illustration in a bit more detail, folks. So firstly, we've got a company here which has 8 engineers. It spent 2 million in R&D. You've got 1.2 million dirhams of spend. You uplift it by 30%, so you've got 1.56 million dirhams of qualifying staff cost spends. You've got material costs and sort of UAE subcontractor costs. And so there's 2.3 million dirhams of R&D activity, qualifying R&D activity costs. So because there are only 8 members of staff, it will unlock tier 1 and it will unlock tier 2, because you need a minimum of 2 people to unlock tier 1, you need a minimum of 6 people to unlock tier 2, and you need a minimum of 14 people to unlock tier 3, as we've seen in the previous slide. So in this instance, they're only able to claim 500,000 dirhams. Okay, and again, hopefully that concludes how the numbers work. On to the next slide, please. Now, folks, this is very important. Okay, this is probably the sort of second most important slide, having now sort of understood what phase one's all about, and it's a pretty hard one. You need written pre-approval from the Emirates R&D Council before you can file a claim, and that's not optional. Okay, so, and it's not retrospective, and it's mandatory per project. So if you don't get approval, you don't get the credit, full stop. Okay, and as it stands at the moment, January 26, that's when the sort of costs are effective from. Late 2026, we anticipate that's when the portal's going to open. It's not confirmed by the Emirates R&D Council yet, so there isn't a launch date as per se. I suspect early 2027, late 2026, early 2027 is when companies will start to prepare their pre-approval applications, and September 27 is probably when you'll see the sort of flurry of the first R&D claims being put in. So the portal isn't open yet. You literally cannot apply today, but companies can start preparing for their sort of R&D by sort of collating all the documents, etc., which we'll come on to in a second. So on to the next slide, please. Right, folks, for the professionals out in this webinar, there are 4 traps to sort of consider. The first one is the SBR trap, so the small business relief. So with companies with revenue of under 3 million, you might be eligible for the SBR, and if you elect for it in 2026, then you don't qualify for R&D tax credits. So just be mindful of that as well, okay? So there may be a calculation required where you work out what the tax liability could be if you don't elect SBR and make an R&D claim, and it might be the case that you have sort of tax credits left over to carry forward and offset against future sort of corporation tax liability, and noting that SBR seems to be coming to an end by the end of this year as well. And so if your accountant is filing your CT return, just have that conversation with them. Now, there needs to be contemporaneous records. Okay, so records created at the time the R&D is being carried out has more weight, and always will do, than year-end sort of reconstructions. And a dated entry in a shared folder is going to be worth infinitely more than a polished report at the end of the year. So start a folder, start documenting the R&D in some way, shape, or form, and put something in place. The third thing is miscounting headcounts. Okay, so that the legislation is quite articulate in what is qualifying employees and how you calculate what qualifying employees are. So and this is going to end up tripping a lot of people, I anticipate. So UAE-based employees and sort of externally provided workers both count towards your staff threshold. The subcontracting companies, if you have any, in itself won't count. But for subcontracted R&D activity, the subcontractor's own workers engaged on your project count as part of the sort of headcount threshold when you're calculating the sort of the 2, 6, and the 14. And the final one we touched upon earlier is foreign IP ownership. So if your UAE entity is doing the R&D, but the intellectual property sits with a foreign parent or holding company, the credit may not be available. That's a may. So you need to see if the UAE entity is beneficially entitled to the exploitation of the IP. And that's something that needs to be taken care of as well. Okay, right. So you've heard the rules, you know the numbers. So what do you actually do with all of this now? So on to the next slide, please. Just 4 things. Okay, map your R&D activity. write down every project where you didn't know in advance whether it was going to work or not. Start tracking your costs by project today, whether that's staff time, materials, subcontractors. And then the third thing to do is start documenting, as we've discussed, a shared folder, a Google Doc, some sort of diary management system, Monday.com, don't really care what it is, or Jira for that matter. And fourth one is speak to your accountant about, hey, before you make that SBR election, I may have intentions to make an R&D claim. Can we have a discussion? So, these are the four things that I would probably start thinking about. Okay, so I think that sort of concludes my session, at least. On to the next slide. So, yeah, I know it's a lot of information to digest here, and happy to answer any questions at this stage.
Yeah, no, thank you very much for that detailed presentation, and I think it's very important to kind of understand all of the ins and outs of an R&D claim.
Thank you.
I know that we have a few questions at the moment, but before we go to those questions, I want to just ask you a few questions, because you've gone through this whole cycle for the last 9 years, right, in the UK, and given the rules are very similar to the UAE, I want to hear more about your experience of this whole process. So, in the UK, how long does it normally take to get an R&D credit approved? I know it's different to the UAE, but I'm sure there's someone. Is it in the UK where you claim and then they audit you, or is there a process where there is an approval that you need to go through before you can start claiming?
Yeah, it's an interesting question, Rehan. In the UK, the way it presently works is if you intend to make an R&D claim, you can make the claim, but what you need to do is pre-notify HM Revenue and Customs, the FTA equivalent, of your intentions to make a claim within a set sort of time limit period. If you fail to pre-notify HMRC and then subsequently intend to make a qualifying R&D claim, you're just out of scope. You're not going to be able to do that. Okay, so that's point number one. Point number two, is there a pre-approval? The pre-notification in itself gives a heads up to HMRC about what sort of activities you have. But what they don't do is pre-approve your R&D claim. The approval per se is always after the fact, or always after the event. So if you submit an R&D claim, it usually takes between 4 to 8 weeks, depending on sort of, it is quite cyclical. So March and December tends to be the busier periods. So it's 4 to 6 weeks, or 4 to 8 weeks, I should say, before you can see your claim being processed. And what you'll also find is that HM Revenue and Customs are able to open an inquiry into your R&D claim for a length of period of time as well. Okay, so you up to a year and a quarter before HMRC lose the right to making an inquiry into your R&D claim. So there are sort of not too dissimilar pieces of legislation in the UAE as well. So hopefully that answers that question.
Yeah, no, thanks for that. Also, when it comes to audits, right, and investigations by HMRC, is that something? Because my view is, if you're a ministry, right, so they're there to collect money from you rather than give you money back. Obviously, this is to encourage your R&D, but ultimately they're there to collect money. Now, obviously, there's audits when you're submitting your corporation tax, your VAT, but now they're actually giving you money, or giving you a credit against your tax. So what's the kind of environment with audits and investigations? Is it more frequent? Because obviously, if you're going to have an R&D claim audit, then they can potentially look at everything else as well, your VAT, your corporation tax, and all of that. So in your experience, what's been the general kind of environment of audits in the UK with R&D claims?
Again, another very interesting question. Being sort of pretty brusque and frank, the UK government has introduced R&D tax credit since around 2000, 2001. Okay, and during the course of the COVID period, it was anticipated that about 1.13 billion pounds of R&D tax credits was claimed fraudulently, or claims were exaggerated. okay, or they were just non-compliant, non-qualifying R&D claims. So HMRC did some investigation and actually found that around, depending on the sector and the size of the claim, but they found around 1 in 5 R&D claims were either non-qualifying, had exaggerated the R&D claim, or were fraudulent. Okay,
1 in 5.
1 in 5 in some
Wow.
sectors. Yes, 1 in 5 in some sectors. So what's happened is, so now they're sort of introducing this pre-notification, giving them the heads up as to whether you qualify or not. They are introducing something called a pre-approval scheme. And what the UAE government has done, it's quite interesting actually, Rehan, is that they've learnt from the news that they've been reading from other regions, because the US has done something not too dissimilar. And they've actually said, we're not going to get into this mess where whether you sort of qualify or not is something that's decided after you make the claim. We're going to do this beforehand. And this is why the portal is there. And this is why you need sort of good advice, sound advice, to make sure your case is represented in the best way possible, or you're dissuaded from making an R&D claim because you genuinely don't qualify. So answering your question, are there inquiries? Yes. What do these inquiries tend to do? They tend to ask for copies of contemporaneous records of your R&D activity. They tend to ask for copies of invoices. They ask for documentation as to how you've allocated staff percentages on your R&D staff. You know, if you're going to say, I don't know, Muhammad spent 10% of his time on R&D, well, how can you prove that? For example, does it impact other areas of taxes like VAT and corporation tax, etc.? I've never seen that in practice. However, the scope of inquiry is always limited to the R&D tax credits, in the UK at least. And I'd just like to finish off by saying very quickly that if a company intends to make an R&D claim in the UAE, their accounts need to be audited, and that's going to be a prerequisite. Okay, what that audit requirement looks like, I'm not too sure about, and maybe and I'm pretty certain the R&D Council will, whether it's a special purpose audit or something of that nature, or whether it's just a general audit that people tend to do because it's perhaps a requirement in a particular free zone, for example. But answering your question, inquiries, they have been 1 in 5. They've been quite aggressive. There are sectors that just don't qualify. And what they also do, and just sort of my last closing sentence on this, is they've started appraising the actual advisors. So if you have a particular advisor that always gets an inquiry into an R&D claim, HMRC starts scrutinizing them, thinking, hold on, they're doing something wrong here. So knocking on the doors of a reputable, well-seasoned R&D tax advisor is also recommended as well.
Yeah, no, thanks for that. I was going to ask you about fraud as well, because obviously, when it comes to tax, there's always some sort of cost cutting or shortcuts that people are always trying to do, because entrepreneurs are entrepreneurs, right, at the end of the day. But yeah, I think you covered that, and I think especially in this environment, right, there are some companies that obviously would like to exaggerate certain things, and they may want to use this as an opportunity to get money back. And for me, it's about just making sure you do it the right way. And yes, this is a scheme to support businesses in the UAE, but and there are plenty of legitimate businesses who are incurring costs for R&D purposes. And it's just making sure that everyone's doing it in the right way, and they are following the correct rules to ensure that they can get that credit back. We've just got one question. So this is a question from Aprana. If we are performing group R&D services, meaning benefits accrue to overseas entities, but UAE bears the cost, would that qualify?
Do you mind repeating that question again, please? Sorry, Ray.
Yeah. So if we are performing group R&D services,
Yeah.
meaning the benefits accrue to the overseas entity, but UAE bears the cost. So the UAE is doing the R&D, but the overseas entities are revenue generating. Would that qualify?
The answer is no, unfortunately. The UAE entity needs to benefit from the exploitation of the R&D in some way, shape, or form. That needs to happen. Okay, you need to think about this. Why would the government allow you to reduce your taxes now on the basis of knowing that the R&D the UAE entity is conducting is not going to be, the revenue of which isn't going to be recognized in the UAE entity? Okay, so if the UAE entity has no intentions, genuine intentions of recognizing the revenue, then it can't qualify for R&D tax credits. It may be the case that there needs to be some sort of a restructure or some sort of a transfer pricing arrangement or some sort of royalties, etc. to think about.
I was gonna say if you're charging royalties, right, then I guess it would probably qualify, but you'd need to obviously have correct advisors to ensure that, or someone like yourself to make sure they're doing it right.
Yeah. Absolutely. Yeah, it's got to be at arm's length. Of course it does.
Yeah.
You know, you can't say, hey, I'm going to earn 1 dirham out of every 1 million, and that's commercially sort of feasible. It just isn't. But it's a good question. That is.
Cool. All right. I think we're pretty much good in terms of time and content. I think you've done an amazing job just explaining this not difficult but complicated concept. So you're providing the service. What are the things that you're doing at R&D Vault in the UAE?
Sure. So what are we doing with R&D Vault in the UAE? We're bringing our sort of decades of experience into the UAE. First of all, the UAE is following very much the UK aligned sort of legislation because it's following the 𝗪𝗪𝗃𝗃𝗏𝗃 manual. So what we're doing is helping businesses to identify whether they qualify for R&D or not. We do that appraisal. Okay. We then set them up for pre-approval. So we'll manage the entire sort of pre-approval process with the Emirates R&D Council and the FTA when that opens up. What we're not, and this is very clear, we're not an accountancy firm. We don't do VAT. We don't do tax returns. We don't do bookkeeping, and we don't do sort of any audits or anything of that nature. What we simply do is R&D tax credits. Okay, and what we'll do is help you to make compliant R&D claims. Or your portfolio companies for that matter. So we'll go through and navigate through the legislation. We'll help identify and quantify the value of your R&D costs. And we also have a very well developed platform in the UK, which we're now migrating into the UAE, which allows you to quantify and track all your costs. So if the Emirates R&D Council was to ever knock on your door, or the FTA to say, hey, can I have a breakdown of all your costs? You have contemporaneous records as well. So we'll be coming into businesses frequently to make sure that their businesses are actually capturing the R&D at the right points in time, and it's not a test of memory at the end of the year when you sort of truly want to make an R&D claim. So that's what we're looking to do. That's what we are doing. We're appraising a lot of companies right now. We are waiting on the R&D sort of council portal to open up, but we're also doing is educating the sort of ecosystem as well, and we've got a plethora of blogs on our website which get regularly sort of posted for you to have a look at your own leisure as well.
Cool. No, sure. Thank you very much for your insights, your knowledge and your time. This webinar obviously is being recorded. It will be available on YouTube. It will be available on LinkedIn as part of the event as well. Sure. Thank you very much. Look forward to you in the UAE.
Thank you. Thank you for having me. Thank you.
Take care.